President Trump is reversing course just 1 week after announcing widespread tariffs on virtually every trading partner in the U.S. He announced today he's issuing a 90-day pause on those tariffs, instead sticking with a 10% tariff across the board after learning more than 75 countries want to negotiate. The exception, China, where a 125% tariff is now in effect. It is the latest retaliation in a trade war between the two countries after China announced they will raise their tariffs to 84% starting tomorrow. That global trade war obviously having a big impact on the market today. I'm joined now by Dr. Tyler Schipper, an economist at the University of St. Thomas, to talk about it. Thanks for joining us tonight, Doctor.
Happy to be here with some good news, I guess.
Yeah, I mean, it's good to watch. I mean, I think it feels good anyway to watch the Dow explode, the S&P. That reaction on news of just a 90-day pause, what do you attribute that to?
Well, I think it's two things. One is it's a scaling back from what the market interpreted as really, really bad. These reciprocal tariffs. And so even though we're still talking about tariffs and they're still widespread, they're less bad than they were yesterday. Along with that, it's probably some of the Trump administration seems open to negotiations, that this isn't just about building walls, apparently. It's also about the negotiations, and Wall Street is hanging their hat on that going forward.
That hoping that he's saying, I might take an off-ramp. This might be an off-ramp to what I said I was going to do. Well, we're saying there are 10% tariffs on most of the world, the exception being three of our biggest trading partners, Mexico, Canada, and China. Mexico and Canada will remain at 25%. Now China at 125%. Is it surprising to you the markets reacted the way they did when considering those three big trading partners are still in pretty high territory?
I am surprised. I think particularly with China, I think Mexico and Canada are still in this kind of limbo where some of their goods are subject to tariffs, some of them are being held off. And I think that speaks to the continued uncertainty that yes, there was market jubilation today, but tomorrow there's going to be a reevaluation of what's next, what's coming down the road, and will these big tariffs on the source of lots of our goods and a market for lots of our goods be staying there for the long term?
And we heard this morning JP Morgan CEO Jamie Dimon saying he thinks the recession would be likely. Do you think this pause on tariffs, do you think President Trump heard that? Do you think it was a reaction to what he's saying? I'm sure a lot of these business leaders are in his ear saying, please stop, because we can't handle this and there's so much uncertainty. What do you think it is that drove that decision? Any ideas when you look at the economic future here?
You know, I think that to some degree that the amount of turmoil probably had some effect on this, that you were starting to hear from business leaders that were being a little bit more vocal. There's some movement in the Senate about curtailing the president's tariff power. And so there were some movements and pushback against the White House that we haven't otherwise seen. Now, that might be on hold for now, but it could certainly pop up again if tariffs become the new way forward.
So if all of this holds, and that's a big if we know, because it seems like it changes every day, what do you foresee happening? We heard from a small business owner at the top of the show saying it's just complete chaos. They can't get product. They don't know how much to order. Also, this is going to affect consumers who say, I don't like uncertainty. I don't want to spend money. We see Delta downgrading their forecast because people are just holding off. So if it remains this way, what do you see happening in 3 months to 6 months on price of goods and the economy?
So even though we feel good today because there's only going to be a 10% tariff and 125% on China, that's big. That's still large, and people need to understand that as time goes on, we're going to see bigger price increases bleeding into retail stores and for apparel, that we make a lot of stuff in China. It's
$500 billion worth of goods
$500 billion of goods. Any toys you buy, any electronics, those things are going to be going up in the weeks and months to come unless we change course.
And we were saying in the commercial break, groceries could be going up very soon.
Yes, particularly if those tariffs on Mexico and Canada are reinstated. Those would be big areas where we'd see increases, and that's already been a pain point for lots of people. So my concern going forward is those prices already stress out families that were already stressed, and that bleeds further into consumer mood. And consumers are what drives our economy, so if they're not feeling like the future's looking better, they close their pocketbooks.
Let's try to end on a positive note. What's the best case scenario you see here?
So I think the best case scenario is that this is all about negotiation, and maybe the president can pull the rabbit out of the hat and bring down those tariffs, creating new markets for U.S. companies abroad. And if we're able to do that, that could actually have a positive employment effect going forward, where our companies enter new markets abroad and those customers get products they want.
All right. We so appreciate your time tonight and your insight. Thank you, Dr. Schipper.
Happy to be here.